Now, what does it mean for QSR chains like McDonald's?
Inflation is here to stay in some form or the other in every country. And therefore, good companies have to take cost out every year as a part of their DNA. And the whole mantra in India, at least from my point of view, and that's what I tell my leadership team, is to grow volumes and simultaneously cut cost. And if you are able to grow volume and cut cost, that's how the margin expansion happens.
Presented by eBix Cash. हर खुशी के लिए काफी है. Co-powered by Green Lamb Laminates. हर गुस्ताखी साफ.
Hello and welcome. I'm Chaiti Narula. Thank you so much for tuning in to the Business Today show. Let's start off with the top business news first. Stocks rise for the second day in a row to one-month high led by financial counters. Sensex climbs over 400 points. Nifty breaches the 16,000 mark. Crude oil prices continue to crash. Brent hovers around $100 per barrel. Oil prices at a 3-month low and 7% just this week. Rupee weakness persists despite oil prices hovering $100 per barrel mark. Early strength erased as banks buy dollar to meet imported demand. Dollar index stays near a 20-year high. More trouble for Chinese phone manufacturer Vivo. The enforcement directorate finds out that Indian unit transferred 62,000 crore rupees to its parent entities in China over a 5-year period. That's a Business Today TV exclusive. Rakesh Jhunjhunwala-backed Akasa Air gets air operator certification. Will commence commercial operations by July end. Telangana gets major investment as French aviation giant Safran will invest $150 million in the state. Company will set up maintenance facility in Hyderabad that will create 1,000 jobs by 2025. Pakistan raises benchmark interest rate again, this time by 125 basis points to 15% in a fresh bid to win IMF bailout. Pakistan has raised interest rates by 800 basis points in September 2021 to control inflation. The markets end with robust gains for the second day as cooling crude oil prices eased inflationary concerns. The Sensex jumped over 400 points, reclaiming 54,000 levels. Nifty rallied, getting back at 16,000 mark. 38 of the Nifty 50 constituents closed in the green, led by Hindalco. Titan glittered in trade, rallying nearly 6% post the robust Q1 report card. Other blue chip gainers were Tata Steel, JSW Steel and Tata Motors. On the flip side, Dr. Reddy's, Labs, Cipla, Bharti Airtel, Nestle and HUL were the top laggards. Meanwhile, the rupee continued to fall despite RBI's measure to stem the fall in the currency. Rupee declined 19 paise to close at 79.13 against the US dollar. Time for Business Today's commodity roundup. As the recession fears gather pace, crude oil crumbles amidst uncertainty. Prices hover around the $100 per barrel mark. Crude oil prices are at a 3-month low, tumbling 7% just this week. And it is not just crude that is seeing a rout. Gold too has been losing sheen. Let's head across to Naveen Mathur, Director Commodities and Currencies, Anand Rathi Shares and Stockbrokers, to talk about the downfall in the commodity prices. Let's begin. Mr. Mathur, gold prices have declined recently in the last 2 days. What would be your outlook on gold? With also the recent hike in the import duty of gold, is it the right time to invest in this asset class?
So yes, you are right on the point that the gold has been on the declining trend for the last 1 or 2 days. After we have seen a spurt on the gold prices, the spurt was largely because of the increase in the import duty from 10.75% to approximately 15% for the imports of gold to India. I think that particular import hike was largely because to curtail the current account deficit and thereby hold the slide or the depreciation of rupee against the dollar, which the government has taken the stance on. I think as far as the international markets are concerned, we are seeing the prices hovering at around $1,740 means per troy ounce in COMEX, and Indian markets, the prices are hovering at around 50,600 per 10 grams. We have seen prices last week at around 52,000 also in Indian markets. So the trend is definitely neutral to bearish. If I'm saying bearish for simple reason that the gold prices, or I would say the gold prices are inversely correlated to the currency movement. And in this particular case, the dollar is appreciating because of the Federal Reserve monetary tightening policy and the interest rates hike. The last interest rate hike of 75 basis point was one of the highest hikes we have seen since 1994 June meeting of the Federal Reserve. So I think the monetary tightening is leading to dollar appreciation, and which is impacting the gold prices on the negative side. So 1740.42 is what the dollar rate is quoting on the COMEX at this particular moment. If you ask me on the outlook, as I said, is neutral to bearish. Bearish to an extent that we feel that the gold prices, which are hovering at around 50,600 levels, might go down to approximately 50,400 to 50,300 levels for a very short period of time. The first support level is 50,500. And the next is at around 53.50. So I'm maintaining a view of around 49,500 to 50,000 per 10 grams for the gold prices in a short term, which is a month or so from here, from about 50,600, which it is quoting currently on the MCX.
Now, as the crude prices hover around the $100 per barrel mark since April, how is this shaping up and how will the impact be in India in the medium to long term?
So the crude prices going down definitely have the positive impact on our country, because we import about 75 to 80% of our consumption of crude from the other countries, and therefore with the rupee depreciation and so much high value of the imports, definitely it will have a positive effect if the prices are down. And you rightly said the WTI is quoting at around 100. It has touched below 100 also today sometime, but then it is quoting at around 100, and the Brent is at around 104 or so. So I think Indian markets too have behaved that way. It is just that the rupee depreciation has been holding the Indian prices on the MCX futures contract for July at around 7,800, 900 levels per barrel. But otherwise, the impact would have been much better if the rupee would have not been depreciated against the dollar. So this week, we have seen the crude oil prices slipping by around 8%. There are concerns with respect to global recession because of the tightening of the monetary policies across the globe. There is also a concern about inflation being high, and therefore the stagflation kind of scenario, which might be seen in due course of time. So I think overall trend therefore is slightly negative for the crude at this particular moment. If you see even the highest numbers of COVID infections in May, since late May in China, again developing some kind of a concern of the economy not being doing too good after the recent zero policy lockdowns we have seen in China. So that zero COVID policy is somehow can be seen impacting the Chinese growth, and China is one of the largest on the imports for crude and the other metals. The inventories have been high. We have seen the crude inventories. The API reported that the crude inventories are holding above 3.8 million barrels, which is expended, not the depleting inventory. So that is also a negative for the crude oil prices. So I think overall the scenario on crude is kind of around 100 to 105 for the WTI. If nothing negative comes in from Russia and Ukraine, and we feel that the prices in the short term may remain to these levels, but slightly positive with China announcing a stimulus package of around $220 billion to support their industry. So overall trend, mild bullishness from from here, but $105 to $106 levels would be something the WTI can be seen in the short term.
All right. Thank you so much, Mr. Naveen Mathur, for joining us on this broadcast. Appreciate your comments there. The earnings season is here and investors have already started factoring in the potential performance of blue chips like TCS, Infosys, Wipro, Mindtree that are to declare quarterly earnings this month. With the fear of recession looming large and macroeconomic concerns weighing, how will the IT sector fare this earnings season? Karishma Asadani joining in with more details.
Well, right, Chaiti, the earnings season is upon us, and look who is to start is. It is the mega TCS. The IT sector has been quite under pressure since the start of this year, with Nifty IT down by more than 20%. The IT services companies will continue to, in fact, remain stressed because of macroeconomic concerns, the external factors which are well witnessed, a high retention cost, increased level cost, and sharp cross-currency headwinds. Analysts feel that among other IT players, Infosys could lead the pack since it backed large deals which will provide it with good revenue. According to ICICI Securities, TCS will see a 3.6% growth in the quarter in constant currency terms. Growth in Wipro and HCL is expected to be soft. The IT companies will in fact face margin pressure for 2 more quarters as clients may postpone spend amid global inflation. Margins are expected to improve in the second half of financial year 2023, but revenues may start taking a hit from second half of financial year 23.
All right, Karishma, leave it at that. Thanks so much for joining us with those details right there. Budget carrier Indigo will reinstate salaries of pilots and cabin crew by another 8% from 1st of August. The airline will also reinstate layover and deadhead allowances for pilots and cabin crew from 31st of July. The hike in salaries by Indigo is coming just a few days after the airline witnessed delays in its flights across the country on 2nd July and 3rd after a number of its cabin crew took leaves. Salaries have been a difficult issue for Indigo for the last few months, as other domestic airlines in India had till now reinstated salaries of their employees higher than Indigo. And Vivo remains under ED scanner in an alleged money laundering case, and Business Today TV learns from sources that the Chinese mobile company transferred nearly 62,000 crore rupees to its parent entities in China from the India unit. This was done over a period of 5 years. Our correspondent Karishma Asadani joins us now for more. Karishma, there seems to be a persistent crackdown by the agencies against companies holding links with Chinese counterparts on the basis of PMLA. What are you picking up from your sources? How much trouble is Vivo really in?
Well, right, Chaiti, ED's action has been quite strong when it comes to companies that are having links with Chinese firms. In fact, Vivo has been quite under the scanner, but we're getting you this accurate information from our sources which say that Vivo India has almost transferred rupees 62,000 crore between 2017 and 2021, and this has come from ED's investigation and searches. In fact, the investigation revolves around the whole point that despite the fact that the turnover of the India firm has been about 1,25,000 crore, why was this 62,000 crore revenue gains showed as expenditure on their balances? So I'm told by my sources from Finance Ministry that Enforcement Directorate will be further investigating this, and as and when they're clear with their analysis from the documents seized through searches, they may take a step of summons. But that has to be in the long run, only after they are sure of the investigation.
All right, thanks for joining us with the details right there. Now, gone are those days when you have to pay a fixed premium every year for your motor insurance policy. You can now buy a motor insurance policy that charges you a premium which is based on your driving behavior. This is because the Insurance Regulatory and Development Authority of India has permitted general insurance companies to now launch telematics-based motor insurance covers such as pay as you drive, pay how you drive. Let's get into the details of the new auto insurance rule. Joining me now is Animesh Das, Senior Director, Motor Underwriting at ACKO. Animesh, for the benefit of our viewers, please explain in simple terms, what is the new IRDAI norms? What are they?
So I think before this circular, most of the customers or the product which are being offered from the insurance company, those were irrespective of the kilometers you drive and the kind of driving you do, right? So if you're a good driver or a bad driver, in both the cases, you were getting exactly the same premium. And if, let's say, if you're driving 10 kilometers a day to your office, or you're driving 5 kilometers a day on a daily basis, or you're not using your car at all, right? So all these kind of users were getting almost the same pricing for their insurance premium. Now with this new circular, IRDAI has given an option for all insurance company to charge different premium to the user depending on how many kilometers do they drive on a daily basis, or depending on the kind of driver they are, right? So if they're a good driver, logically they should get better pricing or lower pricing, and if they're a bad driver, logically they'll get a slightly higher pricing than an average. So this is what the circular covers. There's one more aspect. The second aspect is the floater policy for car and bike. So how does that work is that typically, let's say if I'm a customer who has both a car and a bike, in this case, I used to get different premium for both those vehicles. But now IRDAI has allowed all the insurance company to club these two products and give a floater policy, which will cover both the vehicles, right? So that will again reduce the premium for the customer, because if I have two vehicles, typically I'll be using one vehicle at a time for most of the average cases. So in that case, this will also help the user to get a lower premium from the insurance company and actually manage their policy in a single paper itself, right? So that's what the new circular actually covers for the users.
And what is the impact likely going to be? Will the cost go up for bad drivers and go down probably for good drivers?
Yeah, logically, yes. What will happen is that for the good drivers who actually have a better driving behavior, they follow more traffic signals, they don't end up meeting an accident, those users will obviously have slightly better pricing or better premium for them. The bad drivers are slightly going to get penalized, and they'll have to pay slightly higher charges. Same is applicable for on the basis of usage as well. If I'm someone who works from home, right, which is actually a decent use case now given post-COVID scenarios in India. Good number of people actually work from their home, right? And if they're not using their car much, then they should get that benefit, and this circular allow the users to actually get those benefits. So the premium will go down for good users, and the users who are not driving much, the premium will go up for the users who actually are bad drivers.
And should the insurance regulator discourage the option of taking only a third-party cover and instead make comprehensive coverage mandatory?
So I'll not say that the comprehensive cover can be made mandatory, because that's more of the customer's choice. Because if he owns a car, and obviously it depends on the usage of the vehicle, but if he owns a car or a bike, it is their own financial management whether they want to buy an insurance for the comprehensive part. What is mandated in law today is obviously the third party premium, which obviously impacts the third party, right? So that should not be a choice given to the user. Whoever owns a car or a bike has to have third party insurance. So in my opinion, the comprehensive cover should not be made mandatory. But by these initiatives, I think the affordability of the insurance product, the comprehensive part of the insurance product, which is own damage, will obviously get better, right? The customers will be able to choose their own damage component. So we should generally encourage the user to kind of buy the whole package, because that will make sure that they are financially stable. If there'll be a worst case scenario, if the vehicle is stolen or there's a total damage to the vehicle, the losses are very high and obviously impacts their whole financial planning. So it's good to have comprehensive product. Making it mandatory, I think, will be a burden on the user.
All right. Thanks so much, Animesh, for joining us with those details right there. We're slipping into a very short commercial break, but stay with us. Lots more coming up on the other side as well.
armor.
Welcome back and thank you for being with us right here. While Maharashtra and Karnataka are receiving heavy rainfall, northern India lies parched post some rainfall last week. And with food inflation on the rise, the RBI and government are now banking on a good monsoon to ease the rising prices. But with the rainfall deficit in June, it's the kharif crops that may face setbacks. To discuss this and more, I'm joined by Dr. Rakesh Jhunjhunwala-backed, who is a scientist at IMD. Thanks, Mr. Jhunjhunwala, for joining us. Now, poor monsoon in June has impacted the sowing of kharif crops, and paddy is the worst impacted. Will this add to the rising food inflation, in your opinion?
Yeah, this adds actually, the people who are associated with, this, who have information and knowledge about, what time the paddy normally, picked up, sowing operation. Like if you talk about Madhya Pradesh or if you talk about Punjab, Haryana, or even Madhya Maharashtra, Marathwada and Vidarbha, actually the monsoon arrival over this pocket is July 1st week. So I don't think why in some part they are telling there has been lot of impact in terms of the sowing operation. If you see like cotton and other, they must have started, because as we indicated that there will be active monsoon or monsoon progress very quickly right from June or 28 onward, and that has happened actually. So I don't think there would have been any much deficiency or any lower side, the sowing operation would have been there. I don't accept this actually, because if you see the rainfall has been very good right from 28 June onward, and the area wherever there were some limitation like Madhya Pradesh or interior Maharashtra, the rain has been very high for the last 7 days. So I don't think there has been any reduction in the sowing in terms of the acreage or coverage area of any crop actually.
All right, appreciate you joining us on this broadcast. Thanks so much for those opinions right there with Dr. Jhunjhunwala. After banning wheat exports in May, the government has now restricted export of wheat to other countries. The government has now put in place a new approval framework for shipment of wheat flour. Exporters of wheat flour would now need approval of Interministerial Committee for the shipment of atta. The new rules are going to be applicable from 12th of July. The applicability encompasses wheat flour, which is atta, maida, semolina or rava, whole wheat atta and resultant atta. Yogi Adityanath, the Chief Minister of UP, has completed over 100 days being at the helm of India's most populous state, and he is now busy charting out the way forward for the state to have an economy worth up to $1 trillion, up from its present size of nearly $270 billion. Take a listen into what Yogi Adityanath had to say on this.
ये 3 चरणों में उत्तर प्रदेश के विकास की एक ठोस रूपरेखा होगी, और जिसमें 23 करोड़ जनता के जीवन में विकास और सुशासन का लाभ देने और उत्तर प्रदेश को $1 ट्रिलियन की इकोनॉमी के रूप में परिवर्तित करने की उस ठोस कार्य योजना को हम लोग आगे बढ़ा पाएंगे.
The pandemic has been a game changer for AI and robots, but the tech community is divided on what advancement in robotics mean for business. The robot revolution was supposed to take away our jobs, throw the economy into chaos, but it seems to have changed them for better and for worse. Business Today's tech editor Ayush Alyavadi caught up with Amazon Robotics' Ty Brady and discussed the robot revolution. Here is what he had to say.
You know, when we talk about automation, the world seems to be divided into two parts. A lot of people back home and a lot of academia and academicians also say that automation is going to make, well, the world a tougher place when it comes to jobs. A lot of people will lose jobs when we're talking about robots becoming a lot more ubiquitous and a lot more adoption in that space. And then the other side talks about how this can really augment what already exists. Where does Ty Brady stand on either end of that argument?
I stand with our data. And our data shows that we've added more than 520,000 drive units to our fulfillment centers. And in that period, we've created more than 1 million new jobs, right? So more robots, more jobs. Now, robotics has to be done right. It has to be done in a way that enables human capability, that extends human reach. And this is where we focus on making our robotics easier and safer for our employees to use. And when done right, that actually helps create jobs. And that's what we've seen inside of Amazon. But it has to be done right. It's not a humans versus machine type of relationship. Hardly. The way that we frame our relationship with machines is as humans and machines working together to create a symphony of amazing work to be done. Right? So humans and machines working together in order to achieve the task that's ahead of you in a very natural way. Right? So our engineers, our scientists, and they are incredible. And I am blessed to be able to work with just some of the smartest people that I've ever worked with in my entire life. They've really have helped solve this really hard problem of how can we add to the tool set of our employees, and so that makes it easier and safer for them to do their job.
So by that logic, this whole Armageddon scenario that's been painted by the media and by a lot of tech billionaires as well, that's not going to happen.
I don't see
humans versus AI.
We can look at 100 years of incredible invention. In the past 100 years, we've had the rise of the internet, the rise of computers, really understanding physics, aviation, and we see over 100 years with incredible advancements that we continually add jobs. Again, if technology is done right, where it doesn't create friction, but it actually helps people do their job. If technology is done right, that it makes it more safer for people to be doing their job, then that allows you to be more productive and gain more efficiencies. And when you do that, when you gain those efficiencies, we then earn the right to offer the world's largest selection of goods to our customer at a low cost. And getting the right good to the customer's door at a low cost is what we're all about, and we're going to add automation to do that.
Well, that's it from me, Shweti Narula. Thank you so much for tuning in. Thanks for your time.
Do the rising petrol prices and inflation scare you? How much do you earn in a month? Well, the World Inequality Report will knock your socks out. And why? Because it says India stands out as a poor and unequal country with an affluent elite population. 15% of Indians earn less than rupees 5,000 every month, while 22% of the national income goes to the 1% rich community. The report flags a drop in global income during 2020, with about half the dip in rich countries and half in low income and emerging countries. Are we living in the prime of inequality? In 2019 and 20, among different employment categories, the highest percentage was of self-employed workers, which was 45.78%. Followed by regular salaried workers 33.5% and casual workers 20.71%. Self-employed workers also belong to the lowest income categories. The report pegged the country's unemployment rate at 4.8% for 2019 and 20 and the worker population ratio at 46.8%. Let's not forget that this was the same time when the pandemic had hit the world. Clearly, the daily wage earners had no source of income during the lockdown period. Now, to address the wealthy population. In India, the wealthiest households are in urban areas, with as much as 74% of the urban population in the two highest wealth quintiles, as opposed to more than half of the rural population, which is 54%, which falls in the two lowest wealth quintiles. Chandigarh has